Hello and welcome to our special coverage of the state of the economy. Today we are waiting for the first quarter GDP numbers. Our data poll shows that the GDP could have grown at 15% for the April, May, June quarter. The Reserve Bank's estimate stands at 16.2. We will have to wait and see. There is a good chance that the base gets revised, in which case all these numbers, are up in the air. But it's a strong number largely because 2 years ago, the same quarter was the severe lockdown COVID quarter. So we had a minus 26% GDP for the 2020 year. 2021, we made up half the way and we had a fairly decent 18% growth, but it didn't overcome what we lost in 2020. And that's why this year, the April, May, June quarter is expected to come in very strongly. We will have to wait and see what the numbers throw up. We've got 2 other numbers that have just come in. We have the core sector data that looks like a bit of a disappointment, coming in at just 4.5% for the month of July. It looks like a bit of a disappointment. Coal and cement have done very badly, but that is to be expected because these are, monsoon months. But okay, the GDP number is here. It's 13.5%. The April, May, June number has come in at 13.5, which is quite a disappointment. 16.2 is where RBI stands, and at 13.5, this looks like a serious disappointment. The farm sector growth has not done too badly because everybody was expecting that to do badly because of the heat wave and a likely impact on farm output. But that's come in fairly good at 4.5%. Mining sector at 6.5 is not so bad. Again, these are all base effects. I think manufacturing has quite clearly disappointed with just a 4.8% growth. So manufacturing clearly has not recovered the whole hog. Construction sector at 16.8 has not done too badly. The GVA number has come in at 12.7. The CNBC-TV18 poll was, I think, north of 13%, 13.5, 13.6%. So the gross value added is also a disappointment. But it is the overall GDP number that will go down as a bit of a disappointment. We will have to see whether the base has been revised. So, I have my sympathies for the experts who are joining us. We don't know whether the base numbers have been revised. Let me invite our experts, Kaushik Das of Deutsche Bank, Anubhuti Sahai of Standard Chartered Bank, D.K. Joshi, the chief economist from CRISIL, are joining us. In a minute, we'll also be joined by Soumya Kanti Ghosh, the Chief Economic Advisor of State Bank of India. Gentlemen and Anubhuti, thank you very much for joining us. Kaushik, to you first. GDP 13.5, a bit of a disappointment?
Latha, we are not that disappointed. We had 14% growth, so I was expecting a little bit lower than what RTI was expecting, around 16.2%. Okay. So 13.5, 14% is within my range, and I had a GVA forecast of about 12%. I think you said that it has come at 12.7. So
that's right.
These numbers are not that great a disappointment, and what is more important is these are year-on-year numbers based on very favorable base effects. But even if you look at the sequential growth momentum from January, March to April, June, in order to get a 13.5%, there has been quite a sequential, increase in growth momentum, particularly because we came out of the Omicron and there was pent-up demand. And April, June, therefore, we saw growth kind of increasing on a sequential basis also. As we get into the next quarter, July, September, as you talked about the core infrastructure growth coming down at 4.5%, I think growth would be at about 6% from here on, and then going down to about 5% and 4.5% in the second half of the fiscal year. So, long story short, in our view, this is not that great a disappointment, and it still indicates a good sequential momentum from January, March.
Okay. Well, I can give you a few more numbers as well. Private final consumption expenditure has come in at 25.9%. Okay, this is percentage of total. I'll give you the growth in just a minute. The government final consumption growth is 1.3%. I'll give you the private final consumption. I think that number is right, 25.9. Government final consumption expenditure has grown rather meekly at 1.3%. And capital formation is up 20%. Again, as Kaushik pointed out, that's more a base effect impact. I'll just come back to you with the other numbers. Capital formation 20% higher, government consumption 1.3% higher, and private final consumption expenditure is 25.9%. That's as far as year-on-year growth is concerned. I can just give you the GVA estimates. Like I told you, agriculture has come in 4.5%. Mining is up 6.5%. Manufacturing 4.8%. My sense is that's a bit of a disappointment. Electricity and other utilities have come in 14.7% higher. That's a damn good number. Construction is up 16.8%. Trade, hotels, transport and communication are up 25%. You have financial sector up 9.2% and public administration, defense and other services up 26.3%. So that gives the 12.7%. Anubhuti Sahai, first thoughts?
The numbers are slightly lower than our expectation, Latha. So we were looking at a GDP growth of 14%. Having said that, if we just look at the internals, I think it's a mixed story. From manufacturing sector, the growth is much better than what we expected, and that probably indicates that the manufacturing sector growth is now becoming more broad-based. Because if you simply look at the formal sector corporate earnings and adjust it for high inflation, growth was coming pretty low. So that's a good part. The other good part is related to the public admin services, which you indicated grew at a double digit.
Yeah.
You also indicated that the government expenditure grew just at very low single digits.
Yes.
If these two numbers are right, then it probably indicates that the informal sector activity is picking up. And that, in my view, is a good news. We'll have to look at the internals. Third part, where probably I'm a little bit disappointed, is the trade sector growth.
Okay.
If it is just at a 26%, then I'm not sure we are back to the pre-pandemic level. So not such a good news on trade front, but probably that can become a growth driver in the next few quarters.
I agree with you. I think it is this, the public administration line, which Anubhuti is referring to, is public administration, defense and other services. It is the other services which is the informal part. And as she points out, if government final consumption expenditure is not too good, then the public ad number is probably contributed to by the other services, which could be personal services in formal sector, and that could be a positive. DK Joshi, do you want me to read out the numbers again? Public ad up 26%, financial services up 9.2%, trade, hotels, transport, communication and broadcasting up 25.7%, construction 16.8%, electricity and other utilities, gas, etc. 14.7%, manufacturing 4.8%, mining and quarrying 6.5%, agriculture 4.5%. How do the numbers square up for you?
Well, I think it's essentially a story of a rebound in contact-based services, and I think that has spilled over to private consumption also, I think, which grew at 25%. Apart from that, I think the momentum in utilities has been there right through the pandemic. So I think it's not a surprise that that utilities have done pretty well even in this quarter. Overall, I think the number is a little lower than we expected. We were expecting around 15.2%, but I think this is a rebound, and I think it's not very difficult to capture precisely how the economy will grow. From now on, I think the growth probably will be on a lower track, because this exceptional base effect that you got in the first quarter is not going to play out in the second and rest of the quarters. So I think my sense is that the contact-based service revival has spilled over to private consumption, particularly in urban areas as well. And I think that is getting reflected in the other services, I think, which includes a host of services from, I think, personal services as well. Okay. So I think that probably these are the drivers. So it's a lopsided recovery. Manufacturing is still, I think, is still underperforming, I would say, overall. The construction is, of course, government-led. Government
Okay.
capex by the central government in the first quarter was pretty high. I think the growth was around 57%. States were lagging, so I think it's a mixed story that has yielded this number.
1 minute, Mr. Joshi. I think the previous year's numbers have been revised higher. I'm just looking at the previous, last year's data. We had been given to understand that the first quarter was 30.47 lakh crore. Is that the number you all have? 30.47 lakh crore was what we were working with. But now the new number we have for the previous quarter is 30.52 lakh crore. So my sense is that there has been a slight upward revision to the first quarter of last year, and that perhaps accounts for the maybe lower than expected GDP number. If the Reserve Bank was working with 30.47 lakh crore as the GDP in the April, May, June of 21, and if that has been revised higher to 30.52 lakh crore, that may explain a part of, I'm reading out GVA numbers over here, not GDP numbers, but that may account for a bit of the disappointment. Kaushik, do you have the previous aggregate numbers?
Latha, I don't have the details as yet, but what you're saying can make sense, particularly for the manufacturing sector.
Okay.
I mean, 4.8% growth year on year with such a positive base. If you look at the IIP number in double digits, this kind of doesn't make sense. I mean, it's much lower than what we would have expected for the GVA manufacturing. So maybe there's some revision which has taken in the past, which has increased previous years.
Manufacturing previous was 5.43 lakh crore. That was the number we have last year. And now the previous has become 5.77 lakh crore. So you're right, Kaushik. Yeah, 5.43 was what we were told last year. Now we are being told that last year's number was actually 5.77. So that's a good 30,000 crores more.
Yeah, so that makes sense. So that's why I'm saying like 5%, 4.8% year-on-year growth this year on manufacturing. It was not making sense unless there was a revision of the past year, which you explained. And we have to look at more details of these revisions and then try to see what kind of sequential growth we've had. But also one more thing which you should focus on is basically the nominal GDP growth. Because if you remember, April, June was this quarter where we got 7.3% CPI growth, and WPI inflation was also in double digits of 15%. So the GDP deflator would have been very high. And therefore, unless nominal GDP has increased quite significantly, it would have squeezed the real GDP growth. Otherwise, probably the real GDP growth would have been higher.
Yeah,
so probably we'll get more details about the nominal GDP side as well.
You're right. Nominal GDP is 26.5% higher. So a great deal of it is accounted for by prices. The real GDP, of course, is up 13.5%. Gentlemen, now I think we have Shaumya also joining us. Shaumya, we are in a bit of a jam here because it looks like the first quarter of last year has been revised higher. So then how does the 13.5% GDP growth look to you?
Good evening, Latha. I think regarding the revision, let me just make my point clear. I think as per the quarterly data, the customer is not to revise their earlier data, and it is only revised in the month of February. So if I look into that point, I don't think revision has made a significant difference. So even if I assuming that 30,000 crore has been the revision, I think on a base of around 30 to 35 lakh crores number per quarter, I think this is a very small revision. The moot point, I think the number is quite disappointing to say the least. The manufacturing numbers are significantly, and I just got the data in front of me. I think in May there was a revision. This time there has been no revision. So I think that goes out of the window. And the second thing is that the manufacturing is very disappointing, and we are expecting a far higher number. At 8.6% is very disappointing, and the results, the corporate results have not been that bad. So I think this adds a twist to the story. And the other sectors also, if you look into this, the core GVA has actually slowed down and has grown at 12.2%. And you're asking about the deflator. The deflator is 11.6%. So if I sum up all these numbers, and if I assuming that the RBI projections of Q2, Q3, Q4 holds true, then...
Okay. Well, Shaumya, we will dial you up again. I think we just lost you. I'm sorry. I think the May revision was something I should have checked. And Shaumya says that there is no difference from the May numbers. I just have the May number here, but it's not very clear at the moment. Okay, if there isn't much of a difference, yeah, 30.52. I'm sorry. Already in May, the first quarter was revised to 30.52, and it has not been revised since. So 30.52 lakh crore indeed is the previous number. There is no revision in the base. Then 13.5, perhaps we have a right to be a little disappointed. Kaushik is maybe a little disappointed. The others are a little more disappointed because I think the average we got was 15 and Reserve Bank stands at 16. Shaumya, can you hear us?
Yeah, I can hear you.
Yeah, you're right. 30.52 lakh crore. So no revision in the base.
So
please go ahead.
No revision. So that means that if we grow at the RBI projection of 6.2, 4.1 and 4% for the subsequent quarters,
yes,
we are ending the year with a growth rate of 6.7%.
Oh.
And our projection should also then move now closer to the 7% handle if we assume that our projections also hold out. So I think that makes the story a little bit disappointing in terms of the trade-off between the growth and the inflation right now. With inflation trending downwards and we're in a rate hike cycle and growth disappointing, I think it has disappointed. I think it will be a very delicate balance on the part of the policymakers going forward.
Oh, this is not looking very good at all. Now that 13.5 number looks genuinely disappointing. As Shaumya is explaining, if we go with this 13.5 compared to Reserve Bank 16.2 for the current quarter, then unless there is a fairly decent uptick in the coming quarters, we are going to end up with a 6.7% growth and not a 7.2% growth as was estimated. Actually, already the professional forecasters were not expecting 7.2. I think the last forecast was 7.1. But now, with this first quarter number, we are going to get to perhaps less than 7%, which could be a bit of a disappointment. Anubhuti, did you have time to look at the numbers a little more? If you have it on your phone, what is the bigger disappointment for you? You were anyway unhappy with the manufacturing numbers.
No, I was actually happy with the manufacturing numbers.
Okay.
Yeah, I was slightly unhappy with the trade. We expected a much sharper recovery. 25% looks good at the headline number, but we expected a slightly stronger number there. On the whole, I would say that 13.5% can still give us a 7% growth for the year, and the reason is that trade has, it still has a lot of room to catch up. If we think about this quarter, growth is holding up pretty well despite what's happening across the world. So I think 7% growth still looks possible to us unless something really hits us in the second half. Construction sector activity, as pointed out, cement, steel, all those productions are doing pretty well. As you highlighted, probably this quarter could have been bad from the agri perspective, but that has not turned out to be the case. So that probably also provides some kind of a support. And if we exclude government from this particular GDP print, the private sector is clearly showing signs of pickup. And as far as this quarter is concerned, I think this quarter would have further made it made it more widespread. So I think, yes, to some extent, there is a disappointment because we were expecting a 14% GDP growth, but I wouldn't be thoroughly disappointed with just one quarter number.
What was your number? Sorry.
And I don't think it will be too bad.
What was your number, Anubhuti?
My GDP number for this quarter was at 14%, so it came at 13.5. Next quarter number is 6.5%. And as I said, there are a few other areas where we can see some catch-up playing out in the next few quarters.
Okay. Well, I have to take a commercial break. It's not a long one, just half a minute. We are back in a jiffy and we have more questions for our experts. Welcome back to our coverage of the macroeconomic numbers. We just have the big GDP number that has hit the screens, and it is a bit of a disappointment at 13.5%. The CNBC-TV18 poll stood at 15%, and the Reserve Bank estimate or forecast was 16.2%. Soumyakanti Ghosh, the Chief Economic Advisor of State Bank of India, was explaining to us that at this rate, even if the other quarters remained as per the Reserve Bank forecast, we could be ending the year at 6.7% and not at 7.2%, as is the Reserve Bank's current forecast. We've been speaking with Kaushik Das of Deutsche Bank, Anubhuti Sahai of Standard Chartered Bank, D.K. Joshi of CRISIL, and Soumya Ghosh of State Bank of India. Mr. Joshi, did you have time to go through the numbers? Any further comments?
Well, I think what I see in the numbers is also some sort of normalization, because the sectors which were lagging, for instance, private consumption to GDP has gone back to 59%. So which means this has grown. So this was one of the lagging segments, I think, in 21-22. I think this from the demand side. So that normalization is taking place. And second is, I think, from the supply side, the normalization of contact-based services. I think so. In a way, I think the growth may be a little lower than what we expected. But I think the unevenness in growth is somewhat reducing, I think, because this quarter was not functionally disrupted by COVID.
Okay. Soumya, could you go through the numbers a little more closely? From the expenditure side, is there any big disappointment in terms of private final consumption expenditure or capital formation?
No, if I look into the numbers carefully, on the expenditure side, I think the gross fixed capital formation actually have grown at a decent 20% odd.
Yes.
And the private final consumption expenditure has grown at around 25.9%. And the government final consumption expenditure actually stagnating, is almost 1.3%, which is basically not grown at all. The important point to note over here is that if you actually look, and the overall nominal GDP is around, if I look at, it's 26.7% in the first quarter, and with a deflator of around, I think, 12.6%. The important point to know is that if you look into the deflator sector-wise, I think the disappointment has come in the mining sector, and I think it's primarily because of the significant inflationary trends in the first quarter, the commodity price cycle, which has possibly dented the performance in this sector. But as I emphasize, the core GVA has expanded at 12.2%, which is basically excluding the government, and which was 24.6% in last quarter, in the previous quarter in the Q1 FY22. So if I take all these factors into account, my sense is that this number is clearly a disappointment, because there was, before this number came out, I think there was two sides of the story. I think the side was that the number could actually outshine the RBI expectation of 7.2%, and the other side was that it could be falling short of that. I think that trend is now clearly visible, that the growth rate this year, I mean, if we get 7.2% becomes the upper bound now. And I think all numbers is likely to be revised downwards, because as I explained, at the same rate, will be just touching maybe 7% or below, even if there is an improvement in the numbers in the subsequent quarters.
Okay. Fair point, Soumya. And I just want to alert that, you know, when you look at private final consumption expenditure, if we can have that number on the board, that looks like it is, 25% higher than last year. But, last year already was a maimed quarter. We were just recovering from the year ago, which was a very bad quarter, the 2020 quarter. So the correct normal quarter we should be comparing ourselves with should be the 2019 first quarter, April, May, June. And at that time, private final consumption expenditure was 20 lakh crore. This is 2019. We are now at 2022 and it is 22 lakh crore. So it's just about 10% higher over 3 years. So it's not a very good recovery. And that's what Soumya Ghosh is pointing out too. That, the numbers look very big if you look at it only from year ago levels. But year ago was a partial recovery from a terrible base of 2020. And therefore, if you looked at a 3-year compounded growth, then this does not go in as a very robust quarter. Kaushik Das, any further comments from the numbers that you have?
So, Latha, if there is no revision and you confirm that, and Soumya also pointed to that,
yes,
then the manufacturing of below 5% YOY is disappointing. It should have been higher, and that is where the weakness is. Otherwise, you should have got a higher number as per GVA is concerned. Now, the thing is, the way to analyze this particular quarter's data is more on a sequential basis, quarter on quarter, rather than looking at year on year. Year on year will not give you the whole story. And given the volatility in GDP data, I think 13 to 15% growth range we should not, look into too much details and trying to think like why it is down a little bit here and there, because India's GDP data can be very volatile and we can have revisions later and we can be, anywhere in that particular range. Okay. So as far as the range is concerned, with what you had as consensus and what we've got, 13.5% to 15%, I think doesn't change the narrative that, we are in a sequential kind of up move in April, June compared to January, March.
Correct.
But as we head more into the second half of the fiscal year, growth will start slowing down, and more so in FY24 as RBI's rate hikes start impacting, as the global economy slows down more. So seen from that perspective, I think it is also with respect to what expectations each person had with respect to this forecast. Like I had 14%, so I'm not that greatly disappointed. I got 13.5%. And our FY23 growth forecast is 7.1%. So I think that is broadly in line with what Anubhuti said.
Okay. So you are
still have 7%,
Kaushik,
7.1%.
yeah, Kaushik, I just want quick comments from everyone on whether you will change your full year forecast. Soumya, you think you might at this moment change your forecast, right?
Yes, our forecast will be revised. We'll look at the numbers closely.
Okay.
So there'll be a downward revision in our forecast.
Fair enough. That should be, let's see what the Reserve Bank itself has to say when they present their data ahead of the next policy. Dr. Joshi, will you be revising it either ways?
Well, it does create a downside bias, but we'll have to do the math before we come out with a number.
Fair point. So downward bias from two experts. Anubhuti, yourself?
We'll maintain 7% growth.
Okay,
that
7.
looks pretty good to us till now.
Kaushik, you're standing at 7.1 and you don't change.
No, I mean, I think it's broadly in line and no need. And next quarter, we are looking at 6% and then 5%, 4.5%. So it's broadly in line with our forecast.
Okay, so your second half is stronger than what the Reserve Bank expects, and therefore you think we will make up what we have lost in the first quarter. Gentlemen, thank you very much. Soumya, Mr. Joshi, Kaushik and Anubhuti, thank you very much for staying up for us on a holiday, and a very important holiday in Mumbai, and analysing the numbers for us. To summarize, the numbers are a disappointment. They are lower than the CNBC-TV18 poll, which itself at 15% was lower than the RBI projection of 16.2%. And the experts believe, Soumya Ghosh in particular, that if you go with this kind of a number, first quarter number, the full year GDP number may have to be revised below 7%, probably 6.7 or thereabouts. Mr. Joshi also believes there's going to be a downward bias. Anubhuti and Kaushik Das are standing at around 7%, and they may not revise the number. But there is a very good chance that this year we may not make it to the 7% mark, which is a bit of a scare. The other scare, of course, is that there could be a global slowdown. China's not picking up as much as was expected, and the US also could slow down, going by the pace of rate hikes that Jerome Powell is talking about at Jackson Hole. If there is that kind of a global slowdown, then perhaps 7% could be a challenge for other reasons as well. The first one being the arithmetic challenge posed by the first quarter. So we wrap up on the note that the GDP numbers are slightly disappointing. Thank you very much for watching. There's lots of news and updates lined up for you.